What is up, everyone? Happy Thursday, 4 o'clock. Trade to Black podcast presented by Flowhub. I'm your host, Shad Dales. AV off on the trip to Orlando today with his daughter who turns 1. So congratulations to him and his family. But Anthony Coniglio is going to come on in just a moment and talk about a lot of industry stuff as we look at this latest earnings and why this earnings season definitely feels different. It does in a lot of ways. You saw some of the tweets that Ben Kovler put out. He's got the cash. They're probably not going to pay 280E. So what does that tell you? We also saw $4 million of inflows of MSOs yesterday. So some telling signs. I see a lot of comments here as to what's going on, as to whether or not it's going to happen this week or next. We keep hearing that we should hear something soon. Doing the best we can. This is all that we're hearing on our end, but we continue to work hard to find out what's the latest rumors and when we should anticipate, hopefully relatively soon, some news from Attorney General Pam Bondi. So be patient. The bottom line, as Mark Cahotis said the other day, it's not a matter of if it's going to happen, but when. So judging by that, there's probably a lot of investors out there that have a lot of options. And that's the only thing I can think of as far as these deadlines that you guys are all concerned about. So again, just be patient here. It is going to happen. So we'll sit back and see what happens next. So let's get into today's podcast. But before we do, as usual, today's podcast is presented by Flowhub. Flowhub is a serious cannabis operator you already know. Margins are tight, compliance is complex, and execution matters. That's exactly why so many leaders in dispensaries across the country run on Flowhub. Flowhub gives you real-time inventory visibility, built-in compliance reporting, integrated payments, and powerful analytics, all in one streamlined platform. No patchwork systems, no manual workarounds. So whether you're scaling from one location to 5 or managing multi-state footprint, Flowhub helps you move faster, stay compliant, and protect your bottom line. If you want to learn more, then book a demo at flowhub.com. All right, let's kick things off here today. And in case you missed it from this morning, pre-market Trulieve, they reported their latest print. Q4 2025 and full year 2025 revenue came in at $293 million versus $297.9 estimate. Adjusted EBITDA was $105 million. That beat consensus, which was $102.6 million. EBITDA margin was 36%. Gross margin was 60%. Net loss, $43 million versus the estimate, $7.3 million. That's because of the debt that they cleared up, obviously, back in January. Full year revenue, $1.2 billion. Gross margin was 60%. Operating cash flow, here's a good one for you, $273 million. That was a record. Free cash flow was $229 million, another record. $50.1 million in branded unit sales. That's up 5% year over year. And $256 million cash on hand. So all in all, you know, if you look at a quick takeaway, margins, they remain industry leading. Cash generation is elite. Net income was still pressured, largely tax and accounting related. So looking back, if you want to compare from this year versus last year, Q4 revenue was down 3% year over year. Full year revenue roughly flat to slightly up. Gross margin 60% in Q4 and fiscal 2025, essentially consistent with fiscal 2024 levels. SG&A discipline as well, everyone. Fiscal 25 SG&A was 38% of revenue. Fiscal 24 was 43%. And another big one here, wholesale revenue was up 25% year over year in fiscal 25. That's one of the clearest growth levers versus last year. So all in all, if you're framing this, you know, in a lot of ways, I think this was, you know, not a blowout market. I think this was a margin, you know, concentration market, to say the least. And all in all, it looks like they're in very, very good shape. And most importantly, they have the optionality of Texas, PA gaining traction as well. Clearly, there's some stuff about Florida that we've talked about in the last couple of episodes, and it's still, you know, probably not going to be on the ballot in 2026. But like anything, they've cleaned up their debt, and we've got rescheduling, you know, on the horizon and 280E going away. This is big, big, and big. So all is well for Trulieve, and I think it's telling when you look at Trulieve and GTI, as far as the two big leaders in the space right now, what they've printed so far. So Curaleaf is coming down as well as we speak. Guap's working behind the scenes, so he'll give me some stats, and we'll quickly dive through those and break it all down as well. But Before we get into Anthony Coniglio logging on and talk about some of the key things we need to watch this earnings season, quick word now from our friends over at freepouch.com. Stay locked in, everybody.
Hey, if you follow markets, trade volatile sectors like cannabis, or run a business day to day, you already know how important focus is. Headlines move fast, decisions matter, and distractions, hey, they're everywhere. And for me, if I don't stay focused, some days my days can end up like this.
Oh man, I got a lot on my plate. Oh my God, I get through those emails. And I got to get that package out. Where did I leave my sunglasses?
But when I pop in a free nicotine pouch, my day starts to become more focused, and it ends up like this.
Hey, yeah, let's do it. Let's lock in that 67% gain. Great trade.
Because listen, I don't smoke, I don't vape, I don't want anything like that in my lungs. And that's why I use Free Pouch. Free gives you control with clean nicotine delivery, ranging from 3 milligrams up to 15, depending how intense your day is. Just discreet, clean focus when you need to lock in. Check them out at freepouch.com. And right now, you can save with promo code TDR20 at checkout and save 20% on your next purchase. freepouch.com.
All right, welcome back in to TDR's Trade To Black presented by Flowhub. Now time for our guest. Let's bring in Anthony Coniglio, CEO of NewLake Capital. Good day, sir. How are things? Can you hear me? Can you hear me? Lake Capital. Good day, sir. How are things?
I am good. How are you? Can you hear me okay?
I think so, yeah.
No.
Do you hear I hear a little back.
Good. How are you?
I hear a little echo of my voice. I hear a little back. Can't hear me?
I can't hear you.
Okay. Maybe log on, log back off. Here, 1 second. I want to log on and log back off. How can we? There we go. Bear with us just a moment, everybody. We'll bring him back up. Yes, Curaleaf did pre-announce a couple weeks ago, but net revenue came in at 333.1 million. An increase of 2% compared to Q4 2024. Net revenue of 327.9 million. Sequentially, net revenue increased 5% compared to Q3 2025. A net revenue of 317.9 million. Gross profit of 161.8 million and gross profit margin of 49%, an increase of 60 basis points year over year. Adjusted gross profit of 161.9 million and adjusted gross profit margin of 49%, which was an increase of 20 basis points year over year. So, all right, we got Anthony in the background again. We'll bring him up in just a moment. All in all, though, international revenue, here's another one. International revenue of 172.5 million, an increase of 63% compared to 2024 revenue of 105.6 million. Gross profit of 631 million and gross margins of 50%. All in all, what's the operating cash flow, GWAP? From continuing operations was 152 million and free cash flow from continuing operations of 89.3 million and a net loss from continuing operations of 201.9 million or a net loss per share from continuing operations of 26 cents. Let's see if Anthony Coniglio can come on now. He's good to go.
Yeah, I'm back.
Here we go. There we are. What's going on, my man?
Everything's great. How are you doing?
It's good. Sitting here talking to myself for the past 10 minutes, but that's okay. Going through.
No, you're doing great. And I love the new commercial.
I appreciate that. I get a lot of feedback from that. But yeah, you know what? It's as I said in my title, it feels like this earnings season is different. And I don't want to sit here and say that the numbers are all that different. We continue to see a lot of these same trends. The major MSOs continue to perform, and that's just the direction. I don't think this is where we're going. Like, we've arrived. These are the days that we live in the cannabis space now. What makes it more telling is there's imminent rescheduling news and what this could actually look like in a post-rescheduling environment. And you're starting to see some of that language, especially on Twitter today with Ben Kovler. He's got the cash. He can pay 280E, but he's electing not to. So I think the big question people really want to understand is, after this comment period's done, what happens to this industry if it gets re-rated, and how soon do you think that indeed does happen?
Well, listen, let's not get into the how soon will it happen. None of us really know. Where everybody's tapping into their sources and talking to the folks they think have credible information to give some insight into this. And so I focus less on the exact day it's going to happen and focus more on the outcome. I do believe firmly that it will happen. So what does that mean for the industry? 280E is well documented. And when you talk about that re-rating, what's really interesting is we focus a lot of times when we talk on this show, we focus on, and your listeners, your viewers focus on equities. I'd actually think that if you should focus a little bit on credit and take a look at what we've seen some of the operators in the sector accomplish relative to credit. And in situations where you have such significant regulatory reform like we have in cannabis, often you'll see credit lead before the equity investor leads. And so I think we're starting to see some of that because the credit investors have a growing level of confidence in the completion of 280E, and they're saying they're willing to price that risk lower today of 280E not happening than I think you're seeing in the equity markets.
I was going to ask you that, especially when you look at the last 30 to 45 days, is like when you look at everything that's happened, and like, what does this tell you about how the market is reassessing credit risk in cannabis? And clearly it's changing and changing in a hurry. And there's some confidence there. And clearly there is, because it's been telling, as we've been saying on our podcast, the balance sheets, everything, debt, it's all being lined up, and we are ready to like move on to this next phase of the industry. And there's nothing more telling than Cresco, Curaleaf, Trulieve, GTII, what they've all announced in the last 4 or 5 weeks.
Yeah, that's absolutely right. In my opinion, the ability for them to, well, in Trulieve's case, pay down debt. Yes, they got a new facility, but they reduced their debt outstanding, which is a meaningful improvement in the balance sheet for Trulieve. But all of these companies are accessing and pricing new credit or extending out their credit for reasonable prices. And I think that tells you that those credit investors have a growing sense of confidence in the cash flow generation of those businesses, because their decision-making process is all around cash flow generation to repay that debt. This isn't right now, in my opinion, this isn't about kicking the can down the road. Whereas, you go back to some of the shows we did in 23, 24, and we talked about that. We talked about kicking the can, amending and extending. I think today, while that might be the headline for some of these, I think by and large, what's happening under the surface is investors are recognizing the transformational opportunity for cash flow at these companies over the next few years.
You look at some of these rates. Curaleaf was what, 11.5%? Trulieve was what, 10.5%? When you look at this, do you think lenders and investors are already pricing in a world without 280E, or is the market still waiting for that final rule?
I think lenders are absolutely pricing in a world of non-280E, because if they believed that rescheduling wasn't going to happen and they were pricing a much higher risk or a much higher certainty that the existing level of taxation under 280 was going to persist, and that those uncertain tax positions were going to come due, and that they were not going to get out of paying taxes anytime soon, I don't think you would have seen, and I just want to clarify, I'm not suggesting that the uncertain tax positions will just go away. That's a separate question, but I'm talking on a proactive basis. No, I think these investors are expecting that the free cash flow profile of these organizations will be with 280E not active, and that's why you're seeing those deals happen.
Yep. Look, we all know, before NewLake, you spent, 30 years on Wall Street, correct?
In various roles, right?
So you watched a lot of industries like move through credit cycles, liquidity cycles, regulatory cycles. Cannabis has its own versions, definitely had its up and downs, margin pressure, limited capital. We're seeing improved margins and regulatory catalysts that are going to be lining up here in the short term. When you look at cannabis today, I guess through, or even some of the colleagues that you might know that's looking at, cannabis through a Wall Street lens, what tells you this industry is setting up for a capital markets reset in any kind of way? Is there?
Yeah, so I think number one, it's those credit markets. I think those investors that are doing the underwriting analysis are telling us that they believe that there is a change afoot respective to 280E in particular. I think what you're also seeing is this optimism around access to capital, improved access to capital. I think you're seeing some of it priced into the credit. I don't think we're seeing it in the equities at this time. I think the equity markets, by and large, I know people believe that there's some nefarious things going on, and perhaps there is behind the scenes. But what we're not seeing in the equity markets is a pricing in of greater liquidity, greater access to capital, and improved cash flow for these companies. So by and large, what we're seeing in the equity markets is doubt about all that. But in the credit markets, I think there's more optimism.
We talked to John Pinto couple times. I've talked to him off camera too, and just ask him, like, do you anticipate institutions stepping in once we get a rescheduling announcement? It all comes down to the language related to FINRA, and that's, you and I have talked about that endlessly over the last 6 months, year, 18 months, if not 2 years. That'll be telling to see if we get some sort of transparency. And I'm hearing stuff that, there's, conversations. We had Kyle Kazan on yesterday from Glasshouse, and there are a lot of companies that probably are having conversations about uplisting, and if that moves fast. But how do you see that, I guess, unfolding? If there's companies that uplist, whether it's a Glasshouse or whether it's a GTI or whether it's a Trulieve, is there some sort of transparency that's got to come first towards the administration before that actually happens? I'm still trying to figure out how that all plays out.
Yeah. And I think whenever you ask people this, you're going to get a slightly different answer because we're all bringing our own experiences and our own conversations to the discussion. I think one of the key elements that you didn't mention is liquidity. So the way I see it working out, I don't actually think that rescheduling leads to an uplisting.
No.
Because we've talked about this on your show before. The reason that the exchanges aren't listing companies in this sector is because these companies are breaking federal law. Rescheduling doesn't change that. It's still breaking federal law because they will be operating in a Schedule III substance without a license, without a DEA license. Now, maybe they go out and get a DEA license. I don't think a lot of companies in the sector will be receiving a DEA license anytime soon. Perhaps there's additional regulatory change that accompanies the rescheduling order. If there is, it would have to provide certainty and a safe harbor to the exchanges in order for them to get comfortable with the risks that they take on through certain banking regulations, as just one example, like Bank Secrecy Act and anti-money laundering. Those concerns are real for those organizations. And so unless there's something that's concrete, I don't personally see them changing their criteria. They absolutely could, and perhaps others are having different conversations with them. I don't see them changing. When we ultimately get there, though, I want to get to my liquidity point, because let's say we do get reform that has that in it. Well, then that's great. Well, for institutions to step in, an institution will typically look at the liquidity of the investment they're going into. And a lot of times, from an equities perspective, institutional investors, one of the key metrics is the days of liquidity it takes to move out of that investment. And given the low level of liquidity and low level of trading for many of these equities, that's going to be a very, very high number of days if anybody wants to have a significant stake in any of these companies. So my point here is that over time, liquidity in these stocks will grow, and the institutional investors will need to see a sustained elevated level of liquidity to move in with significant capital, unless they're making a strategic decision to have more of an illiquid position, which is a much higher hurdle for institutional investors to get to.
One of our big followers, David Benz, writes, "Come on up to the Nasdaq, boys. The liquidity is just fine." I don't think the liquidity is just fine right now. There's some major numbers that are coming on the horizon if we do get senior exchange. But one of the things Kyle Kazan was telling me yesterday, that there are conversations that are taking place, Nasdaq, New York Stock Exchange, and there's a little bit of FOMO about how each exchange doesn't want to miss out on this business. So I don't know how that plays out. I don't know what goes on behind the scenes. I don't know how that's constructed. But it's worth thinking about that. Is there some FOMO involved where, one exchange may want to get ahead of this versus the other in order to win this business? Because if that is indeed the case, and there are conversations that have been constructed, there's just a lot of unknowns, I think, right now that we are unaware of, that I think will come to fruition relatively soon. And we'll see.
I mean, listen, maybe some people want to characterize it as FOMO. I characterize it as healthy competition. These are businesses. At the end of the day, these exchanges are businesses. And as a banker, I took companies to New York and to Nasdaq and had those exchanges competing for our clients' listing. They compete based on the liquidity that their exchanges offer. They compete based on their ability to have certain market makers available or concentration of industry sectors. And so New York and Nasdaq are competing every single day, trying to beat each other up to win any new listings. That would typically be an IPO or more rare to steal a listing from the other. And so it's natural that when you're speaking to an originations person for Nasdaq or New York, and I've seen this time and again, they're in sell mode. So of course they're trying to sell you about the virtues of coming onto their
Of
exchange
course.
because that's their business.
Yeah.
So I don't
Conversation.
know. I just want to make one final point. So I don't know if it's there's a fear of missing out on cannabis. No, what those people are supposed to do as salespeople is they're supposed to sell the potential issuer on why they should list on that exchange. And then when the green light happens, because the salespeople don't have any impact on that, when the green light happens, then those salespeople can actually quote unquote win the business, win the listing, and get the application.
It's all welcoming conversation that I hope is actually taking place now. And hopefully this moves quicker than what we're anticipating, in a post rescheduling world. But again, to your point, rescheduling, I think if you get direction from Washington, which we've been badly wanting for years, I think there's a lot of other things that'll start to be implemented and fall into place in a hurry. That's my take. And from the conversations that I've had. And, I think people aren't going to believe it until they actually see it because they've been down this road before, but never have we seen reform in Washington. And that's the elephant in the room. We've always been kind of the cart before the horse and everything we've been hoping for over these years. But this is direction from Washington that the industry needs. And once that happens, you look at places like PA. There's all these tractions that are definitely developing, which is great to see, right?
It's fabulous to see, and things are lining up, and it's that domino analogy, right? Rescheduling is the first domino to fall, and that will lead to other good things for this industry. It's not going to be all roses. People still need to get up every single day and execute their business plan and execute it well. Every industry has companies that go out of business. Legal industries, even software and technology companies fail on a constant basis because it's about execution of the business plan. So yes, we need regulatory reform. We need the dominoes to start falling so that this industry can have the same level playing field with other regular way industries. But the management teams will do what they've been doing for the last handful of years, wake up every day and need to execute their business plan.
Of course. When you factor that in, Anthony, and let's say one day we can fantasize about uplisting, there's going to be a lot of companies that don't meet the requirements. Do you believe that in the space? And if so, what are the main things that you're going to want to need to pay attention to for companies to actually qualify for something like that, besides the obvious?
I think the biggest one is governance, particularly when it comes to exchanges. Exchanges are very focused on governance of their listed entities. And so I think whatever it takes for the companies that are public today to uplist, they'll do whatever it takes. If they have to make changes to their governance profile, I think the liquidity profile of being on a New York and Nasdaq and the custody that comes with that, and the liquidity that will come from that additional custody is going to vastly outweigh, in my opinion, any sort of considerations people have to have in modifying their governance structure or the disclosures that they have.
You have worked with some companies, obviously, in PA. We're seeing, I can't believe how nicely, it's nice to see Virginia and how it's, I don't want to say fast track, but it's streamlining very positively. It seems like we're getting news almost every single week. And it seems like everything's all but finalized that we could see that go live either by November of this year or early next year. But when you've got Virginia moving along, Ohio has transitioned, Pennsylvania potentially following all this, which of these markets do you think has the biggest earnings impact over the next 12 to 24 months? Is it Virginia because it's the first one out of the gate? I would assume, but man, if PA gets passed, that's huge, right?
It depends on the time frame you're talking about. 12 months, I'd go Ohio because it's live and it's growing. Right. And I don't think you're going to have Virginia launched. If it does get launched later this year, you're only going to have a handful of months of activity. So in the next 12 months, it is Ohio. But if you're looking over 24 months, I think Virginia, because you're starting from zero adult use, whereas today you're starting Ohio has adult use already. And so I think you could see a bigger impact from Virginia. And even if PA approves adult use later this year, it's still going to take a while for sales to get launched because they need to develop that infrastructure. I think Virginia's been talking about it and discussing it for years now. It just hasn't
I
had
know.
the governor has been blocking it. And so I think that was poised to move very quickly. I think Virginia, Pennsylvania, if we're lucky, and Michael is best to talk about this, maybe a mid 27 launch, I think would be optimistic.
Huh.
I could be wrong on that. Don't take that to the bank. But that's why I pick Virginia for 24 months, Ohio for 12.
What are you seeing as far as operators and how they're performing as far as like the asset level? You have you have a unique vantage point for what you do, but when you look at some of these states and these growing states that are coming online, like what are the strongest, I guess, asset level discipline right now that you're seeing in a state like how much work do you do in Virginia right now?
We don't have anything in
I didn't
Virginia.
think
We
it was
pay attention to all states, but yes, we don't have anything in Virginia.
PA
I'd
for
say, go
go
ahead.
ahead.
No, I
Go
was going
ahead.
to say, I think the earnings, you were summarizing some earnings at the top of the show. I think that's really what we're seeing. We're seeing a
Yeah.
bit of more of the same. Maybe in some places you're going to get a little weakness on margin. In some places you're going to get a little strength on margin. People are laser focused on generating cash flow and trying to generate free cash flow for their business. It's been that way for the last 18 to 24 months. We've talked on your show time and again about the hard work that management teams are doing with headcount reductions, platform rationalizations, M&A to try to leverage strengths, but maybe dispose of states where it wasn't as strategic. And so I think the mix of all of that is the result of, in many cases, improving margins or at least stabilized margins, very low top line growth, depending on the state that you have, but squeezing more out of what they have in the platform. So trying to get more efficient with what they do have.
What do you see on the grassroots level, like when you're going to these states, as to how the industry is emerging and like day-to-day business is being streamlined better? We've had some good conversations with Adam Stetner just about how comes to invoices, on average in the industry, it's like 4 to 5 months. And, they've come up with a model in play they're trying to make streamlining for businesses on a day-to-day basis, just streamline it better. But the reality is like, there are some growing pains and we continue to have growing pains, but is there anything that you've noticed where here in 26 and even the back end of 25 where you see, for our audience to really understand how it is actually growing that produces the margins that you're starting to see?
I think people are getting better at what they do. And
Okay.
so cultivation yields are getting better, THC content. People are getting more efficient with what they have. But we haven't talked about hemp-derived THC, which I
Yeah.
think is another sleeper of a topic that's going to have some tailwinds for this industry.
How does that play out? I don't know how that plays out because I'm
Yeah,
serious. I'm hearing yesterday there could be an extension of this ban. That's the first time I've heard that. Whereas 99% of the other people say no, like they need some clarity, especially if they have this pilot project that's about to begin. And what gets affected? Does beverages become an exception at some point? Like there's just a lot of unknowns right now.
Yeah, I mean, listen, anything we've learned over the last 6, 7 years playing around the cannabis industry is that you can't really predict what's going to happen on the political outcome. But we've also learned how hard it is to get reform from the political class in this country,
Mhm.
particularly around a topic around unregulated, untested, non-age gated product. And I know a big part of the responsible hemp industry is saying, no, we want that type of responsible regulation. So now you're not asking only for an extension, you're also asking for some incremental regulation, which in a election year is going to be, it's hard anytime, but I think in an election year, with midterm elections coming up, it's just going to be more difficult. So hard to predict what's going to happen. But if we do get a ban or if we do get enforcement around this, I think we're going to see some of those sales move back into the state regulated market. Not all of it, and it depends
Yeah.
state by state what percent. For instance, I don't think you're going to see a lot of the beverage sales head back into the dispensary. I think some of that sales activity was convenience, was experimentation, was replacement for alcohol. I don't know that somebody that's going to grab a THC beverage in a liquor store while they're picking up wine or maybe beer for the weekend is going to now make a special trip to a dispensary to pick up those beverages. But I think a lot of the other products, edibles as an example, I think you will find some people may turn back to the dispensary or turn to the dispensary rather than if they can't get it online or can't get it at a local smoke shop, they've been getting it previously if there's enforcement.
What'd you think of that, in addition to the earnings report, the GTI report yesterday, just how they structure that whole separation with RYTHM? I thought that was rather telling as to where they might think this side of the business might be headed. And they're just preparing for themselves. And I think it was actually a pretty strategic move to help them prepare on what could and couldn't happen. And it looks like it could be a win and whatever the outcome could be in this situation. But regardless of whether I'm not necessarily focused on GTI as a company, it's rather telling as to what they may think might happen later this year.
I look at that move and I don't know that they're tea leaf reading, or are they? In my opinion, I think what they're doing more is creating optionality. I think what they were doing is they were aligning the pieces so that they can have a play if the wind goes one way or the other. I don't think it was all chips over to here because we think that hemp-derived THC is the future and it's never going away. I think it was, I can place these chips here and I can play however this evolves from a regulatory perspective.
Yeah. AV is in the house. Expeditiously and imminent are the words he's using. Just stir in the pot, my friend. Stir in the price.
Anthony, don't do it.
Oh, House of Mouse. How is it there? I'm sure it's quite interesting. But all in all, I think, we're off to a great start in 2026. And when I look at people that are saying when, there's just so many telling signs as to where this industry really is. And we always talk about where this industry could go and this is what could happen. I think we're in it in a lot of ways, and we're starting to see changes right now. And one thing for sure is that, there's the biggest companies are performing well. And I think that's okay. That's great. And you're definitely seeing the emergence of an industry, and more importantly, how it's getting more and more attention in the media. You see a lot of op-eds that are going on in mainstream media publications, and that usually is a sign when they're trying to tear cannabis down that there's probably some sort of announcement that's going to come relatively soon. But again, these are conversations that weren't necessarily being had 5 years ago, and they are now. And I think people need to be reminded of that, right?
I think they do. Here's probably one of the more for me, and why I have such confidence that we're ultimately going to get rescheduling. To me, one of the more telling signals is out of SAM. Right? It's the arch nemesis, so to speak, of regulatory reform. But if you look at the way they are changing subtly their messaging, they're no longer anti-cannabis, right? They're expanding that messaging to grab other categories to have a broader reach because they understand the existential threat to them if there's normalization of cannabis, and it'll look like a failure, I think, if the rescheduling occurs. And so they have had some of the best insights on reform, given the connections they have through the government, both in the DEA, the DOJ, and Congress. And I think the fact that they're starting to change that narrative and widen the scope of their, I call it offerings, or the scope of their focus, tells me that they don't think there's a strong future in focusing only on fighting cannabis reform.
That's a good point. I never looked at it that way, but they have tweaked it a little bit, haven't they?
They have, absolutely. And, with regard to your comment around timing, again, we've spoken time and again about people deciding if they're an investor or a trader. If you're an investor, whether it's tomorrow, whether it's next week or next month, right, your long-term thesis is still intact. That's where I sit. Large investor in NewLake, which has a lot of exposure to the sector because we focus only on cannabis. And so as an investor, I am long this sector and I believe in it. But there are folks, I think, that want to know from a trading perspective, will it be tomorrow? Will it be Monday? Will it be 4/20? Will it be May? Will it be March? Why? I mean, why does it matter? Well, maybe you want to trade around that. And then I can understand you're trying to make money off the trade. But for those longer term investors, I'd get less focused on the when, and more focused on what the outcome is that we're going to get it. Because if you go back to the executive order, there was all this talk about when will when will it happen? Will it be Monday? Will it be Wednesday? Will it be Thursday? Will it be next week? It happened. Is anybody talking about the fact that it was December 18th versus December 1st versus December 12th versus December 21st?
Yeah.
Nobody's having that debate because it doesn't matter. It happened. And we'll feel the same way once we get to the other side of this.
Here's another one. He's just razzing us. We're in the end game now.
Burrell, come on, get on the ride. Zoom in.
I've brought this up a few times. It's been a few weeks, but looking back, obviously, at the executive order on December 18th, that rattled a lot of investors. 100% it did. And I think it still, has an effect. Here we are 60, 75 days later. When you look at, it seems like every single day you see a sell-off. Every Friday, it's almost, so predictable in how MSOs, the ETF, is going to perform. And it's so easily manipulated. You see it all over Twitter and people are like frustrated. But another reason why, and Mark Cahotis was on the other day, like, look at the world we're in right now. Like, sports betting is everywhere and they have banking. And I'm not sitting here saying that cannabis companies don't have banking, but if you have proper banking, senior, listings, all that stuff come into fruition, it's going to obviously attract institutional capital, which shakes this manipulation away. And then you see Jane Street, the SEC is opening up an investigation this week regarding some of the crypto actions that they were doing. And Anthony was bringing up some very good points as well this week. But yeah, like when I factor all this stuff in, there's a lot of people that are ready for a change and need a change because that last one back in December definitely rattled some people for sure.
Yeah, big, massive rug pull, I think, yes. And hurt a lot of people. And it's unfortunate because there are real people who lose a lot of money. And so is there manipulation? I don't know for sure. I see the cases that people are making. Some of them sound fairly credible, the cases that are made. Perhaps maybe there'll be some investigations that'll uncover that. But let's dissect what is underneath a long-term sustainable upward trend in any pricing of a security, whether it's debt or equity.
Okay.
And that's the sustained demand for that security. It's when buyers are outstripping sellers. And that means that people believe that they want to own that security at that particular price. More people want to own it at that price than want to sell it at that price. I know that seems obvious, but it's important to remember that it's that sustained imbalance of supply and demand where demand is outstripping the supply that drives prices higher. And I use that word and emphasize the word sustained because it can't just be for a day, it can't be for a morning, right? That's why a lot of these rallies fizzle out because you don't have that sustained demand. And now maybe some of that sustained demand is being scared away because of the manipulation. That's totally possible. But if there was strong institutional demand for this sector, that's where I think you then see the shorts get crushed. And we hear it all the time in the media about how the shorts get crushed. It's because in some of those infamous or famous meme stocks where the retail investor crushed the shorts, it was because the demand for the stock was so significant and unrelenting that it just sent stock prices higher and higher. And then as the shorts had to cover, it just accelerated into their losses. But without the demand, there would have been no crushing of the shorts. So to me, it's how do you get that investor, that institutional investor, to have sustained demand? And the reason I focus on institutions is because that's where the big money is. They're the ones that can have those open orders day in and day out to be buying any sort of selling pressure that comes into the market that sustains the equity prices on an upward trend. And that's what I'm looking for, is that liquidity profile for equities in this sector that allow those institutional investors to come in and sustain demand for that stock.
There's going to be some sort of presence of institutions, even on a rescheduling announcement. It doesn't answer a lot of the questions, but the big banks, obviously, they're not going to be coming in right away, but I still think that you're going to get some institutional capital that starts dipping into the space. We already did see a little bit of that already, but outside of that.
Yeah, but I just want to peel that back just a little bit. Come back to the liquidity point, though, Shad, is An institutional investor may decide that they want to invest
Okay.
$10 million in a particular company.
Yep.
They're going to look at the days that it takes, the daily average trading volume, and typically they're looking at 30 days, but just the DATV, the daily average trading volume. And they'll say, how many days would it take me to get in or out of this position? And if it's 20 days, 30 days, 40 days, you look at the liquidity of some of these stocks, a $10 million position would be 100 days.
Right.
For an institutional investor, that's untenable. They want to see it in a couple of days, 4 days, maybe, you know, they have a particular position they love and they're willing to go out 5, 10, 15 days, maybe as much as 20 days. But if you start to do the math around that and you look at the daily average trading volume of some of these companies, and you do the math and you say, okay, let's just say you took 30 days as an average. Well, how much is that in terms of demand? And then you have to say, okay, if you're a $10 billion hedge fund, if the resulting number that the previous calculation had, make it up and say it's $2-3 million. Is it worth
Yep.
their time
No, it's
to
not.
take an illiquid position? Maybe not. That's why I focus so much on this liquidity. Getting uplisted gets liquidity, and liquidity will grow over time. That will sustain the demand because you're gonna be in a positive feedback loop. Improving liquidity will bring in that marginal investor. That marginal investor brings in marginal demand. That brings in marginal price increase, which improves liquidity, and now you're in a positive feedback loop.
Makes
That's
sense.
what I'm looking for from this sector.
One of the key things to generate that liquidity is obviously interest in analyst coverage. We've seen a lot of decent analysts in this space leave the space over the last number of years. Not a lot left with junior and analysts, and they've done the best that they can. Do you start to see coverage, you know, from the Goldman Sachs of the world once this is implemented as far as rescheduling?
Well, I don't know about from the Goldman Sachs of the world, but let's peel back. You know, having been at investment banks and JP Morgan for quite a while, I can tell you that research is not a charity. Research is a valuable resource that any investment bank will utilize to provide services to their investors where they think their investors are interested in a particular company. And obviously they're not tying, but they want to know that there's some investment banking business available to be had. So in a world where you have this industry that has access to regular way capital markets, and they're likely going to be issuing securities, whether they be debt or equity securities in the future, then yes, investment banks will become interested in this, and they'd be willing to dedicate some analyst research to the sector. I can't predict whether you'll see Goldman, JP Morgan, Morgan Stanley lead that pack. I doubt it. I think you're likely to see other organizations that had previously covered the sector, like a Jefferies, probably be one of those that would step in first and reinitiate coverage on the sector.
Which is welcoming news, you know.
It would be great. Listen, more attention, more institutional reach for this sector is important and would be beneficial. And with a firm like Jefferies, that would be a strong signal to the institutional investor base to pay attention to this sector because it's worthy of attention yet again.
Good job today. One thing's for sure, I can always count on an Anthony as the co-host to make me look good. So whether AV's gone, you're here today. Good job, my friend. But yeah, look, this is all telling information. And, you know, I wanted to dive a little bit deeper into, okay, here's the latest print, but some of the things that we really need to watch for as far as next steps, because whatever we're seeing right now, this is all going to change. It actually already is changing in a hurry. So as much as people want that elephant in the room type question brought up, and that is the final ruling of a rescheduling announcement. And then from there, we're on to the next step. But more importantly, the growth of the industry is happening right in front of our very own eyes. So look at what's going on day to day. And, you know, long story short, I think we'll look back at this time and realize that, you know, we're getting some places, even though we are maybe a little too close to the trees to see the forest to really understand how much growth that we're doing, right?
I agree with that assessment. And we have to make sure that when we talk about rescheduling and we talk about the final rule being put into the Federal Register, we have to remember that there will be challenges to it. So the final rule by statute doesn't take effect immediately. It has a 30-day implementation period. So if the rule goes in, 30 days later would be the implementation. So it's during that 30-day window is when you're going to get those challenges. So, you know, everybody out there, make sure that when you see the final rule, that is a fabulous marker, but it's not done yet.
I hear you. Two things point out to me. This is support from both the DOJ and the DEA, and the people bringing the lawsuit is a prohibitionist group. And to counter with that, there's no better credibility than getting a 252-page document from the HHS on the recommendation of rescheduling cannabis. The work is done, and this isn't some biased, third-party company that is basically offering. This is the United States government that has basically said there's a recommendation on why they feel cannabis should be rescheduled. So, yes, Bill Barr is a heck of an attorney, and I can only imagine some of the things that are on the horizon. But, when you look at the data, this is where it's very telling, and hopefully the data is the biggest selling piece in all this, right?
Yeah, I think the data is important, but think about what those challenges will assert. Most of what I've read is that the challenges will not focus so much on the 252-page report and try to point flaws at the work HHS did. Rather, stuff I've been reading suggests that the opposition will focus more on process and say that the two-factor test that the DEA had wasn't appropriate, right? Just think about the issues around the ALJ and the fact that the DEA said there was a need for a hearing, and they scheduled a hearing, and then the DEA is now going to say a hearing isn't necessary. And so that's going to be ripe for the opposition to say, well, what changed? Now, the question to a judge will be, is that question even germane, and is an explanation warranted? Is it well within the powers of the DEA to make that decision without explanation?
Does a different administration help causes? Well, you're not a lawyer, but at the same time, like, that's the first thing that comes to my mind. But yeah, I can understand how simple things with lawyers are going to become, complicated, and we should be in for a ride. But yeah, I think we'll be holding our breaths. But first is the final ruling, which should be great. And then we're going to get lawsuits in a hurry. But then there's that 30-day window. Hopefully a stay isn't granted. And then after that is the official ruling. And then from there onwards and upwards.
And let's watch Monday, oral arguments at the Supreme Court. Hermione, I always mispronounce it, but the gun case that the Supreme Court is hearing, they're hearing oral arguments. I believe it's Monday.
You know what I wanted to bring up to you before I let you go, and we talked about this a little bit earlier today. We're seeing this everywhere in the broad market perspective, the AI bubble and technology right now, and it's being hit. And you look at all these industries and how jobs could get replaced. And you brought up a good point regarding the cannabis industry as to how it has not been hit and probably won't get hit. Do you want to maybe elaborate off of that a little bit? Because I thought your take was rather interesting.
Sure. Yeah, it was a reflection. Just when you look at mainstream business media, a lot of the talk over the last month and a lot of the volatility in markets, particularly NASDAQ names and SaaS-oriented names, has been the AI, the impact of AI on those business models. Some people say SaaS is going away, and I'm not here to say, I know well enough to say yes or no. But the point is, sector by sector, we're seeing this analysis of how will AI impact the sector. Even in the real estate, right? NewLake, we own 34 properties across 12 states. So, even in the real estate sector, there's been how will AI disrupt real estate or real estate services? And so my reflection was, boy, if you look at cannabis that's focused on an agricultural product, that can't be replaced by AI. Now, AI can certainly help the seed to sale process become faster, better, cheaper. It could help organizations streamline marketing. It could help organizations do other general administrative tasks faster, better, and cheaper. So certainly AI is going to impact every business in the world with respect to how they do business. But what's nice about this industry is a computer can't replace, at least I haven't figured out yet, but maybe somebody will say I'm wrong, but I don't think a computer could figure out how to replace growing a plant. And this is a plant-based and agricultural-based business at the end of the day. And I think one of the things we've heard loud and clear out of Washington is synthetic THC isn't something this country is very interested in. And so I think it's nice to be focused on a sector that doesn't have an existential threat or the perceived existential threat of AI, but rather the management teams in this sector can utilize those tools to deliver better returns for their shareholders, and execute what they do faster, better, cheaper.
Yeah. Automation is obviously big. AI in some capacity, I think, is, having an impact on cultivation, but it all has to be spearheaded by the human mind. And one of the biggest challenges, especially when you're growing stuff at a large scale, is consistency. And that still tends to be, and I can't imagine, how difficult that would be. But we've actually attended, Anthony and I have been out to Village Farms out west in Western Canada. I was really impressed with what they put together, and no surprise, a lot of their growers are originally from Holland and they know greenhouse better than anything. But when you have that size of capacity and the consistency that's involved, there you can't be relying on a robot. And if it does, that'll be years away before any of that comes to fruition. So I don't think AI is going to be coming knocking on cannabis's door and replacing it anytime soon.
No. I think the smart management teams will look for ways to implement AI tools to help deliver their products better, faster, and cheaper, and provide a better customer experience. Because at the end of the day, that's what operators in this sector are all about.
Yeah, good point. That's for sure. Your daughter was out in a skiing contest yesterday. How'd she do?
Yeah, she did well.
Did
She did well. We're really proud of her.
So where were
She's a senior.
you? Where were you skiing?
Upstate New York.
Oh, that's fun.
Yeah, it was nice.
There's some great spots up there.
Yes, it's been a phenomenal winter.
Back in this is going back 1994. We had a high school hockey tournament in Lake Placid, New York. What an unbelievable atmosphere. And we ended up winning that tournament, but takes you back to the history of Team USA beating the Soviet Union in the semis and going on to win the gold medal. But congratulations, as a fellow Canadian friend next door, I will say, a tough pill to swallow. But all in all, I was what a great game, and happy for the Americans to win that gold medal on Sunday. And that just the overall level of interest that it picked up from both sides of the country. I think it's great to see.
It's phenomenal. I love hockey. I'm old enough to actually remember the 1980 team. I remember watching it with my family. I remember, the actual feeling of what that meant at the time. In the documentary, if you haven't seen the Netflix documentary, it's fabulous. Obviously, the movie Miracle is great, but the Netflix documentary, I think, is fabulous. To just have felt that was amazing. And I've yet to get to Lake Placid. I play hockey also, and we were talking about participating in a tournament up there. Would love to get on the ice up there. It would just be a special thing. But that game on Sunday was phenomenal. One of the best hockey games that I've seen. I watch a lot of hockey, and it was just great. It's great to see the rivalry between the countries. I think that the U.S. overcoming that drought is amazing. And one of the best memes that came out of this is Brock Nelson, I'm a New York Islander fan, former Islander, now with the Colorado Avalanche. Brock's uncle was on the 1980 team. His grandfather was on a team before that. One of the best memes was a picture of him holding his son, very young son. Someone saying, has anybody told Brock Nelson's son that he needs to go win a gold medal?
Yeah.
Because that's just tremendous lineage. And I got a feel for Connor McDavid. Yeah, he has a Four Nations win under his belt, but at the end of the day, I think he wants a gold medal or he wants the Stanley Cup. I think he'd give Four Nations in a minute to get a Stanley Cup or a gold medal.
Oh, the media. I saw him get back.
Poor guy.
You're doing this, and it doesn't seem to be happening. You're not winning Stanley Cups. And the look on his face,
what a terrible question.
It's a horrible question.
They should be ashamed of themselves. The guy is phenomenal. He's probably the best player that is out there today. He's just incredible.
And I bet you Anthony, who's maybe watching this right now, the Florida Panthers are a really good hockey team, which is why they've won back-to-back cups. But who's even better is their GM. He is phenomenal. And if they had that GM at Edmonton, then they're winning cups. But the guy
they have a phenomenal first line. Their second line is good. They just come up that short, and it's sad to watch. I'm actually hopefully he doesn't play my team, but I'd be pulling for him in a Stanley Cup again.
In 2014, Steve Yzerman was the GM of Team Canada, and that team, if they had a 1-0 lead, it felt like it was 10-0. They were insane. It was just lockdown. And I think the difference is a lot of Canadians noticed this year, we went with names that people knew, but were tired or hurt. And you saw we had 3 major injuries. And I'm like, not the right thing to do. And that was something that we did differently from the previous Olympic Games when the NHL players were involved. But you live and you learn. But more importantly, it's exciting.
It was very exciting, and there was a big criticism of the U.S. selections because they felt that they left a lot of goal scoring capability back home going over to the Olympics, given who they chose.
Gotta have a
and
team.
I think they did that because they realized that they had enough goal scoring power and they needed more puck control. They needed more ability to shut down an explosive offense like Canada had. I think that team was built to compete against Canada and only Canada.
You know, when I used to do play-by-play, I'd sit up in the booth, but then during the week, during practices, I'd go down to the Air Canada Center and watch the Leafs in Toronto practice. And when you're at ice level, it's like the momentum of the game, it moves so fast. You can't keep up.
It's unbelievable. One of the fastest games I've ever seen, those guys back and forth. And you know what? Let's also talk about the women's game too.
I know,
that
right?
Final was so exciting.
Great game.
They're so good.
I know.
Unbelievable. Like to watch those two teams battle it out.
We have a hometown girl that was on the team, so everybody was supporting her. But for Canada,
what a heartbreak. But I mean, they were so good. And I hate this 3-on-3 overtime format for like regular season NHL, totally fine. But 3-on-3 to win win a gold medal. No, come on. This is a team sport. Should be 5-on-5, just like the Stanley Cup, and keep rolling it until it's done. I understand in the early rounds you have to do 3-on-3 because you got to get the ice turned for the next group. All right, I get it for quarterfinals, semifinals. I don't love it, but definitely not for the gold medal game. Come on, give them a chance to win or lose as a team, not one little mistake. So, all right, we're way off topic, but
all good.
I love talking about it.
I'm placing a bet though. The next Olympics is in France. Let's go over. If Canada wins the gold, I'll pay. You pay for my trip. If the USA wins gold, then I pay for your trip. Does that sound
You're
like
on?
fun?
You're on. Done.
All right, my friend. Good seeing you. All right, let's keep in touch. And real quick, earnings. When do you have your earnings call next month?
We announce earnings Thursday night, and we'll have our earnings call Friday during the day.
Okay, good to know. All right, sir. Best of luck, and let's keep in touch. Okay.
Thanks. Take care.
All right. Good stuff. All right. As I was talking to AC, was AV stirring the pot? I don't know what he was saying, but Guap, you there, my friend? No worries if you're not. Did you guys see Canara? There was High Tide, and there was one other Canadian company that's now getting coverage from TD. That was announced earlier this morning. So the good times keep rolling as far as the Canadian landscape as well. So that is good, positive news. So we're seeing a lot of stuff create. Everybody, hope you had some good takes here today. I think it was all about liquidity. If you want to get institutional money involved in this, which you already know, but I thought it was great the way Anthony explained all that. And I hope you got some really good takeaways. So that's it for our latest TDR Trade to Black, presented by Flowhub. And we're back here next Monday. Mark it in your calendar. Boris Jordan will be on the live stream. So that's going to be huge. We're going to ask some really good questions, not only about earnings, but what happens next. So again, mark that in your calendar. That's going to be telling because we're going to learn all kinds of things, probably from uplisting to maybe when this rescheduling is going to come down and what happens next, as far as, if there is uplisting and the whole CBD aspect as well, and when that gets kicked off. So a lot of good stuff, and there's no better person to speak to in the industry than Mr. Boris Jordan. So that'll be 4:00 on Monday. Anthony and I will be speaking to him. That's it for now. Make sure to scan that QR code, become a daily Baked In newsletter subscriber, and stay connected with us during this earnings season to get all the latest announcements on the latest print the companies are reporting, and most importantly, our takeaway in all this to give you a little bit of better direction heading into market hours. That's it for now, everybody. We'll see you back here Monday. Thanks again for joining us.
Hey everyone, thanks again for watching here today. Listen, if you're getting value from us here at TDR, make sure to check us out at TDR Plus. It's our exclusive membership community. Why? Well, you'll see CEO interviews that go beyond business, showing a personal side that you won't find anywhere else, including the biggest names in the industry. Plus, you'll get insights from analysts and day traders on where the industry's headed, both short-term and long-term, and a direct chat group with our team. It's only $7 a month, just 25 cents a day, and it helps support everything we do here at TDR. If you want to join, just click the join button below and become a TDR Plus member today. And once again, a big thank you for being part of our community. So that's it for today. And again, thanks for watching, and I'll see you next time.